Going over the trades on March the 18th, yesterday we talked about Cobra III, one of the top strategies to trade. And then if you use a $600 stop loss, you're going to get stopped out most of the time in this type of volatility. And you see 1, 2, 3, 4, 5 losers in a row after this big winner right here. This winner was 38.55, so still up overall after one winner and then 5 losers. But we talked about using a bigger stop loss. So what does that look like in today's context? The market went down, shorted into a limit move, and I'm going to show you what that looks like with a $3,000 stop loss. So the bigger stop loss, you have more of an opportunity to withstand these normal counter trend bounces and this kind of volatility. So you see 1, 2, 3, 4, 5, 6 trades here, and you see only one loser. So only one loser, 5 out of 6 instead of 1 out of 6 when you have a $3,000 stop loss. So you do have to, your largest loss on the day will be larger. This can take the maximum of 1 trade per day. And so one thing you could also consider doing is putting a profit target above the limit move. We just had a limit move down, but it could move further. And so if you do that, you could miss a bigger move. We're in unprecedented times, and it's not always possible to know what's best with so many limit moves because there is no historical data to back test. But this strategy is short from 71.34.75. It had to endure enough heat to $1,500, almost $1,500, 60 points, 65 points or so, $1,300 of heat, and so you needed a bigger stop loss to stay with this trade today. It could still reverse, but this is what's going on with Cobra III, E-mini, NASDAQ. So let's go over the rest of the trades. The S&P just tested the December the 18th or the December the 26th, 2018 low. You see that low right here when the Fed eased. December the 26th, 2018, the low is 23.1950. The low on the day is 23.22. It just tested that after the limit move. It's probably going to take that out, and then I don't know, 22.50 could be a short-term bounce. I don't know where the short-term bounce is coming next, but this is a number that the market has been watching for a while. Ever since it was in this price range right here, many thought that it would have to take out these lows before it could regroup, and so we may see a bounce in this area, or it may go lower. I don't know. It's hard to predict what the future will hold in this market, but I think it will probably take out those lows since it's so close. We're only 10 S&P points away right now as we speak. Let's look at it on this. You see here is the price action today. Open limit down and then hit limit down over here. And so you don't see the dots. At night you see these dots when it's limit down. So in the day you're not seeing that depending on your platform. So that is where the S&P is. Let's go over the rest of the trade. So you see Cobra III, E-mini S&P, similar thing, minus 625. Just the stop loss is too tight on that. And SR Counter Trend 2, E-mini S&P hit its profit target plus 775. Prime example of what we've been talking about, how we need to readjust for bigger profit targets in this situation. You could use end of day exits or $4,000 and $5,000 profit targets. Got in at 24.31.50. And so far it's made a low of 23.21. So 100 points, $5,000 profit target would have worked here. So if you're using $5,000 profit targets on these SR counter trends like we've been talking about, you would have had a pretty nice day today. Mirror, a really small profit target that could be increased. Working on adjusting some of these though, so they won't take trades if the market is beyond 4% from the previous day's closing price. Adaptive moving average, pretty choppy downtrend. Taking some false long trades. Should have stayed with the short side. Shorted into the limit move and is still short. Tick Pulse, this has really struggled with tight stops. It's doing really well today, 2,700 up on the day. And those are all the trades on the day in All Strategy Access 1, All Strategy Access 2. Tick Pulse, V12NQ, got its last short in near the highs, really tight stops, plus 3,200. It's really struggled, but is doing well today. 60-minute breakout lost on the long, minus 1,025. S&P counter trend 2, E-mini NASDAQ. Another strategy that would work on the E-mini NASDAQ. Got short at 72.76. Low of 69.51. So almost, well, 325 points, I believe. $6,000, over $6,000. If you would have held on to that trade, we have talked about expanding these profit targets yet. We just have not completed the research on that in relation to the portfolio. And QS3 plus 875 at the open. Tick count trend in Q. It had been struggling, shorting the market on the counter trend bounces. The counter trend bounce happened earlier, and we were able to catch the rollover a little better today, plus 1,050 on that strategy. SR counter trend 2 V2 minus 725. Stop was a little too tight on this one, but pretty good entry really. Just a tight stop. You need bigger stops and bigger profit targets to take advantage of some of these moves. The 5-minute version captured 575 once again, and I mean, prices just traded lower after that. And so it's always nice to grab a quick profit, but not maximizing it completely on that setup. We need to be maximizing these setups a little better. All strategy access 3, gold flash minus 975 on the day. Asia gold 4 short plus 450. Cobra Euro 4 minus 262.50. Soybeans, SR counter trend 2 soybeans has been on a roll up yesterday and today, and in the past. Soybeans is weak. Commodities are weak. The CRB index is at 20-year lows. Gold. Look at Cobra Crude aggressive, really doing well today, plus 23.95 on this short. Who would have thought that you'd see crude oil coming into the $20 level? 23.95. These are just massive century type moves we're having right now. Highest volatility ever. Let's see what else. Did we take any? We didn't take any more trade. Cobra Gold minus 625 on that trade. So all strategy access 5, SR counter trend 2 silver, SR counter trend 2 V2M, 1M silver plus 575 across the board. 3 trades on that. So those are the only trades there. You see we've rolled to May crude oil, and let's go back to the stock index portfolio. The S&P is below, let's see, it's traded at 2,300. The low is 2,300. So it's taking out those December lows, and you see at 22.97. The Dow is 19,173, down 2,000 points. Now these are good entries. Even though these trades are stopped out, these are, if you just look at a chart, you can just see that the stop loss is too tight here. Maybe not so much. But these 3 trades, these stops are just too tight. And like we talked about yesterday, had you increased those stop losses, that's a nice trade. It takes $1,200–1,300 of heat on this trade, but with this kind of volatility, that's not much. And so it's a good strategy to trade. I mean, the market is going down so far, so fast. I don't know how much lower it can go. And so I don't know that volatility will, percentage-wise, it can still go down. But point value-wise, we're getting in on some of the best gains. And then when the market recovers, I anticipate Cobra 3 to be one of the strategies that also does well on the long side and on some of the counter trend moves as well. So Cobra 3 is a strategy to trade. It could have its biggest winner ever with this size of a stop loss. $600 stop loss is definitely not too tight. But this is a prime example of how a tight stop loss can sometimes be riskier than a big stop loss. You think in terms of a big stop loss in your short-term sense of that day, but a bigger stop loss can do better. And if it's 3,000 is just too much for one day, then you have to consider trading micros. And if you risk this on one micro, it's $300, and you're up 71.34. You are up, nearly 300 points on this, coming in 250, 300 points on that, which is $600. Risk 300 to make 600. pretty good. Risk 3,000 to make 6,000 on the mini. And so one of the things too is shorting. A lot of people are opposed to shorting. You'll get a lot of media that will blame the machines, will blame automated trading systems, will blame short sellers. And so this is part of the normal market function to fair value. If if we short it too low, too fast, then the value buyers will have an opportunity to come in. And so we're trading both sides of the market. We provide liquidity as short-term traders, and shorting the market just brings out the truth of what is. And so I'm all for the truth, and as traders we have to be able to find ways to profit in any market environment.